everybody. Welcome back to Mortgage Ballers. This is Rich Hanlin, and today I have the legend, I have the man, I have Matt Dersh. And we're going to talk about loans. We're going to let you get to know him a little bit. Matt works with Xpert Home Lending. He's been in the business for about a little over 4 years. We're going to talk about that journey and maybe some of the things he's done in the past, but we want to let you know the human behind the name who's actually helping people on a daily basis. Matt, welcome to the show.
Thank you so much for having me, Rich. It's great to be here.
Well, I'm glad you're here. You know, Matt, we got to talk a little bit before we started recording, and I'm glad we did. You touched on a lot of things, but not everybody's been in this business 35 years. Tell us again how long you've been in the business.
So I got licensed at the end of 2020, right during the COVID boom, and got hired on in my first company and started January of 2021. So just over 4 years now.
And so you became a millionaire in 2021 and then had to go back to reality in 2022 is what it sounds like.
Yeah, I wish. Our area was so competitive at that time. Like, it was such an imbalanced market because you had so many different challenges than you have now. Back then, it was multiple offers above asking price. Yes, rates were in like the 3% or lower, but people couldn't get under contract. So it was a different environment entirely then. And I also didn't really know what I was doing. So a lot of it was like learning along the job as I was going. But yeah, that's really where I got my start and what laid the groundwork for where I am now.
And if I heard you right, you didn't start in the broker side of the business. You started in the direct lender side of the business.
That's right. That's right. I started in a retail company, and quite honestly, I had no idea what I was doing. Everything was kind of learning on the job. I didn't really have any sort of formal training that this particular company offered. I basically got my license, passed the NMLS test, figured I knew what originating was all about, found someone who got me in, and they helped walk me through a lot of the loans. But I really didn't have like a good, solid understanding of the way that the loan process worked, probably for the first 6 months to a year of me doing it. It took a little bit of time for it to catch on, but yes, that's where I started, and learned a lot along the way about that. And now looking back at it, it's like my worldview has completely expanded from that.
Well, yes, and not knowing any difference, we have a lot of people that have worked both sides of the fence. And not that it's any worse either way. There's a little more freedoms on our side, maybe a little less freedoms, but, you know, our side's a little more, you got to be more of an entrepreneur. You got to be a self-starter. You got to go get it. The hardest part about our side is if you figure it out, then you become unhireable because you'll never go back to putting a ball and chain around your ankle again. And so that's my hope for everybody that comes to this side, whether you're with Xpert or not. You said something too. You didn't just come over by yourself. You're actually part of a team.
That's right. So I'm part of the legacy lending team, which is a DBA business underneath the Xpert umbrella.
Yep.
If you're unfamiliar, it's kind of like if you've got a realtor team that's under a Remax or under Keller Williams or any of those, it's like that. So we still have Xpert as our parent company, but legacy lending is our own branding that we keep everything basically within legacy lending. And so it's been super helpful having that team leadership aspect of it. It hasn't really like negatively impacted me where I have to give up a whole bunch of money or have to give up a whole, like in the realtor world, it's called a split. There's not like this enormous split that I have to pay to be part of the team. And so for me, the value is just, it's been incredibly beneficial to me.
Some of our Colorado teams, I mean, they're off the hook, you know, whether it's altitude, true rate, you got legacy lending, which is basically Tyler and Quinn, you know, plus a whole bunch of people now because they keep growing that thing. No, they came over from Nexa, and that was a big win for us. I was surprised, you know, I'm amazed at some of my competitors that they will even allow their top people to get away from them. But if you're not going to take the time to interact with your people some way, somehow, they're going to feel like they're on an island, and eventually they're going to possibly, unless they just like that, people want to be part of something, even electronically like we're doing right now. There's no reason why we can't do that. So big pickup for us, and they brought some incredible people with them. That team's one of our strongest teams, which hats off to them.
You know, it's funny you mentioned that, if you don't mind me interjecting.
Yeah, go ahead.
There was two different things that you said there that made me think. People wanted to feel like they're a part of something, and then kind of that sense of almost loyalty that they have to someone. And I think that was one of the biggest learning points that I had, because I had that too when I first started in on the retail side. And full disclosure, like after a year and a half of doing it, when the market tanked in 2022, between January, I think it was between January and April is when rates just skyrocketed during that short period of time, and it changed buyer behavior entirely.
Yeah, definitely.
The retail company that I was with, their margins were so tight. I literally just had my best month in May, and by the time July rolled around, I didn't have any closings. They couldn't afford to keep me on anymore. Yeah. I had to find somewhere else to go. So that to me was an eye opener, because I was feeling very loyal to them. Like I wanted to stay with them. And it's amazing what people will do for loyalty. I talked to one broker, individual last week who is with another brokerage. I think the max he can make is 115, 120 basis points per loan. This is as a broker. And he's been doing it for 15 years. And I asked him, I was like, well, I can make like almost double that. I'm like, money's not everything, but just curious, like, what is it about where you are that's keeping you there as opposed to going anywhere else? And he said, well, the people. Yeah. So he was willing to give up half of his possible commission. Oh, and by the way, he's self-sourced just like I am. He was willing to give up half of his commission because of the people that he was around and under the, the comfort that provided. So it's amazing how much value people will give to things that are really intangible sometimes, and the feeling that they get from being there. So just wanted to share that.
No, I fully agree. I still come into the office every day. So I can be around people, because I'm doing a lot of admin too, but slowly getting out from underneath that, which is good, which hence is why we're doing some of these. I got lots of little questions for you here. I want people to get to know you, because this is going to go out to a lot of people, and someone who's never met you, and they're going to say, what's this all about? And so there's two sides of this. There's people that are loan originators who maybe can relate to you. But on the other side, there is the business side, which is there's borrowers that can relate to you. And you also shared with me that was it the Air Force?
That's right. Yes.
Yeah. You've been in the Air Force. How long were you in the Air Force for?
I was there for just short of 5 years. It was from end of 2011 to the end of 2016. Okay.
About almost 20 to 25% of our total business is VA loans. Having somebody that understands VA and the power of the VA, the golden ticket of a VA, if you qualify for those, with the, no funding fee and zero down. I mean, you truly can get into a house for $0, and people don't believe that. And it's also one of the best loans on the market. It seems like day in and day out with the rates. Then you get into the interest rate reduction refinances, the ERLs, which people are like, what? I don't have to do anything. I just get a free. Absolutely. Anytime you can reduce, and there's people that, but what's the key? Every 210 days. So there are some waiting periods, but at the same point, it has built-in things for you, which is awesome. That's a great place to be, by the way. And you're in Colorado, which has the Air Force Academy and other bases, stuff like that. So it helps there too. Talk to me about this side. If people want to know more about you on the individual, borrowers want to relate to people. What kind of hobbies do you have when you're not doing loans?
So when I'm not doing loans, I'd say my top personal hobby is racquetball. I've played it since high school. It's just, I'm kind of like that guy with fishing or golf who always wants to be fishing or golf, instead of whatever else he's doing at the time. I'm that way, except I'm with racquetball. So sometimes I'll just be working alone and be like, man, I wish I was on the court right now. And then I go later in the day. So that's my biggest individual thing. I'm a competitive player. I do multiple tournaments per year, maybe once every 2 or 3 months or so, just depending, regional, national. I'll go up to New York or Texas or wherever there's a tournament. Wow. And then I'm also a dad and a husband. We've got 4 adopted kids, actually. Woo! Really wide range. We got, blow your mind, 20-year-olds, 15-year-old, and then twins that are now 9 months old.
Wow.
So
yeah, I did not know that. My hat's off to you. Congratulations.
Thank you. So it's a lot, but obviously anything, all the family related stuff. So we take trips to Disney and Universal. We go on family cruises. several
Wow.
times a year as well. So we love to travel, and you have to be very intentional and plan it just right to get everything to fit. But yeah, family's obviously what takes up the majority of my time hobby wise. I guess you could call that a hobby. Sometimes it becomes a hobby, sometimes it becomes much more than that, but I absolutely love it. I wouldn't trade it for the world. Absolutely love it. So, but individual hobbies, like when I'm not with my 4 kids and wife, racquetball is what I primarily do.
Okay. Um, that's awesome story. Thanks for sharing that. I didn't know that. And I have a huge heart for kids. I only do charities now that deal with kids. It's from whatever it is, you know. So that's my plug. If you need something for charities, let me know. Those are the charities I do.
I appreciate it. It's good to know. I didn't know that either. So
Yeah, it doesn't help me any good to go build another house for a homeless person. There's too many kids coming up through the systems that don't have the support and things like that. And so that's an easy one to get my money.
that's good to
That's
hear.
where I feel called in my spare time, is to help and give back everything that I can. So I love it.
And I'm glad you mentioned one little
Yeah, go
blurb.
ahead.
If anybody's listening to this and you're considering adopting, or you say, oh, it's too expensive, all of ours actually came through the state foster system.
Okay.
And if you adopt through the foster system, it doesn't cost anything.
Okay.
In fact, sometimes they'll actually, as you're leading up to it, they'll give you like state funds to be able to help along with that. So it's actually the opposite. So yeah, I would say, people are people and kids are kids, regardless of what system they come through. So, we've definitely been blessed from doing that. So if you're thinking about doing it, just take the plunge, look into it, contact your local child support system, and see ways that you can give back.
Yeah, that's a pretty big challenge. I could see where, being a loan officer in today's economy is not the easiest. You came in one of the record low interest rate times when it was fast and furious. I've been doing it 35 years. I've been in a lot of up and down markets. I went through the 2008 to 2012 crash. Real estate took the hit right off the bat in 2008. And then we started figuring stuff out, but brokers almost were non-existent within a year's time. And then we figured out it wasn't the brokers. There was a lot going on there. And, we can only give the programs that are offered to us. If somebody's willing to give us a program and I find someone that qualifies, that puts them in a house or helps them, then I'm going to offer it. It's not because of greed or because I'm trying to screw somebody over. You barely have, adjustable rates. There's no more what we call neg-ams. Most of the weird loans, balloons, those are all gone. Most stuff we do is 30-year fixed. Very few people can afford anything less term than that with the cost of real estate. Even in your market, you guys have one of the top markets in Colorado. When people see this, borrowers, people that are maybe that they just get bombarded all day long and they say, gosh, who should I trust with this? By the way, I'm going to say this. 2 years ago, 400,000 plus loan originators were down to like 93,000 after this last renewal. We're down to 25% nationwide. How crazy is that? So good job surviving in the middle of all this. But for the borrowers out there, which are way more than 93,000, is there a specific loan type? Is there a specific program? What would you tell those people looking for that next person to work with, and they don't know you from the other 45 people that hit them up off trigger leads, and you're trying to separate yourself? What's your separation from that?
I'm glad you asked that, because that's what led me to the broker side. When I started in lending, the place where I started, again, this was COVID, when things were great. They wanted us really just focusing on agency loans. So VA,
Agency.
USDA, Fannie Mae, Freddie Mac, FHA. Like if it was outside of the box, anything non-QM, they didn't want to touch it because like, hey, these regular loans are hard enough. We don't want to do it. You obviously have to reinvent yourself as market changes, which is exactly what I did. And so I started embracing that. So as a consumer, you really need to have all the options available to you, because not every lender is going to have something for your specific situation, depending on what you are. Like especially if you're self-employed, or if your credit's wonky, or if you don't have a long income history, or something along those lines. Like some lenders will just tell you sorry, and then there's no other sort of options beyond that. And to me, that is the beauty of the broker side. I will say last year, there were a good, I'd say probably 10 to 15 deals that I did. I'd have to go back and count all of them. 10 to 15 different loans that I did that I would not have been able to do
Wow.
were broker. Whether it was,
That's a lot.
Whether it was a DSCR loan, which is debt service coverage ratio, basically that's a no income loan for investment property. If you don't know what that is, whether it was a no income loan at all for a primary residence, I did one of those as well. Yes, they exist. They're hard to get, but they do exist. And then all the other different things. And even when you're trying to get the best deal, even amongst those, as a broker, you have all these different lenders to choose from. And so that, I think, is my biggest point that I would say is, hey, I was on the side where it was only one, I had one option to choose from, like in terms of whatever my lender that I was working for offered, that's all. And so if you fit into one of those boxes that were, I would call them the regular agency loans, then great, they could do it. Anything outside of that, it was, sorry, we can't help you, let's go elsewhere. And I did not like having to say no. I still don't like having to say no. And so here at Legacy and powered by Xpert, we've got 120 different lenders. Okay. And all of them do something a little bit different than the next one. A lot of overlap in the products, but basically if it exists on the market in a lending aspect, we have it. And so that is why I would say you need to talk to a broker specifically, because they're going to be able to look at your situation top to bottom and be like, hey, based on your situation, this is a loan that I could find for you. Does that answer your question?
Yeah, it does. Because I was going to say, what advice could you give to a home buyer or a person refinancing? But you said it. You have 120 options where you're not boxed in. A lot of people don't realize that not all lending sources specialize in a lot of things. Some people want the bread and butter stuff because they don't want the risk on their books. 120 lenders, you think, my gosh, there's that many programs. Well, there's some lenders that are willing to take lower credit scores. Some have their cutoff points. Some want the cream of the crop, but yet they're all doing the same FHA product. Things like that. Manual underwrites versus non-manual underwrites. Manual underwrite VA. Everybody has their place where they want to be. And so we try and have a lot of those options. Matt, you're answering a lot of questions for me. I always want to make sure when I do these, you don't know me from Adam. You just know, hey, that's Rich Hanlin. He's the president and owner of Xpert Home Lending. Do you have any questions for me?
Yeah. First off, I when I learned about Xpert, relatively new company, a couple years old, and you're already at 600 loan officers, which is incredible that you grew that quickly. How were you guys able to build your loan officer network so large in such a short amount of time?
Well, we went straight to the Philippines and we hired no, I'm kidding. I had a company before this called Answer Home Loans, and the model was similar to what we have here, a little bit different. We weren't nationwide, concentrated in California, mainly Northern California, but the model was we went a lower broker fee and we recruited higher end loan officers that knew purchase business. Anybody can do refis, but had purchase relationships. And what's interesting, we started with our first one came over, and through that recruiting, we got to see what the hot topics were with them. And we just kept recruiting and morphing that. But it's interesting, after we got to about 10 of what we thought were pretty strong originators, those 10 actually knew another 10 each. And, so the conversation slowly got out. Now, one thing we didn't do there, we didn't have our same recruiting stuff that we have here. That's something that we brought on with this one. That's helped a lot too. But I think the combination, it showed us that the platform was going to work. The question was, how fast would it take to get 100 loan officers, become 200, become 400, become 800? And in all honesty, we combined the best of that platform, took it nationwide so that we could go after the top originators in each state. And again, this time we offered a recruiting of $200, which doesn't affect the borrower. It doesn't affect the loan officer. We take it out of our 750. Instead of getting recruiters, we give that to you guys because you're our best recruiters. 86% of our people have been recruited by somebody already at Xpert Home Lending. So we're able to push that money back. And we tell people, I mean, Matt, I'm not kidding when I say I have some people that we pay $30,000 a month. They've recruited 86 people. I have some people, I have one young lady, she just finally got her third recruit, but that third recruit does 25 deals a month. And that's life-changing for her to have something like that. And that's in this market. Julio's just starting with us. Matter of fact, his specialty is the Spanish-speaking market. He's on Telemundo and things like that. But you put all that together, and then you add in multiple strong influencers at the top. It's not just Rich. You got Lisa, you got Alex, we got Jordan, we got Justin, we got Fallon. Each one brought these unique talents all to the same place and backed up this model that we knew already worked. And we just expanded it. And it's, and then I have no problem saying from there, following God's prompts on my life. If people don't want to hear it, good, then don't. But I don't shy away from it no more. I do not downplay where my ability ends and where the supernatural, God-given talents start to come in over and above my ability. So that's a good question to ask. Not everybody wants to hear the answer, but that is my truthful answer to that question.
Okay. I'm good. Appreciate that.
If you had one thing to say to someone who's sitting on the fence right now, this second, like, gosh, I wish the rates were lower. I would refi. I wish the rates were lower. I would buy. I really want to do something. What advice would you give to someone who's just out there sitting on the fence now for possibly 3 years since rates have gone up? Would you tell them to wait? Would you tell them get off the fence? I mean, and this is not a loaded question. I just want to hear your thoughts. If I was a borrower and I was calling you and I'm like, hey, I'm frightened. I'm scared. I don't know where this is all going. That's a big commitment to buy a house, but yet I'm renting and paying somebody else's mortgage.
Right.
So they're doing great off of me, and I got to sleep somewhere every night on a pillow. What should I do? What are your thoughts, Matt?
That's a very interesting question. I actually got a lot more pushback at the beginning of COVID in 20 and 21 when home prices shot up by 30, 40%, basically overnight. Everybody was convinced that the home prices were overinflated and that it was going to crash. What ended up happening is the rate market crashed. The housing prices did not. They continued to go up, and they have continued to go up since then. I would just say, look at history. There's basically been a couple periods of time. There was 08 to 012 crash, which people call it a crash. And really it wasn't a crash. It was more of a correction. Housing prices did go down in some markets. They stayed flat in others. Where I am physically located now, I actually live in South Carolina. Our team is based out of Colorado. So that's where most of my loans are in South Carolina. Wow. My specific MSA of Greenville upstate, I think we basically only took like a 2% hit in 2009, 2010, and it was basically flat for 4 or 5 years, and then it just came roaring back. So I would just say look at history and look at basically all the data that we have from 1920 until present. Home prices just continue to go up. And keep in mind, this is a long-term game that you're playing. Like this is not Bitcoin. This isn't Dogecoin. This is where you're going to be living and raising your family for the next however many years until you sell or buy or move up elsewhere. And so, yes, if you're paying rent, you're paying somebody else's mortgage for them. If you buy, I would say that the biggest advice that I have is it's not going to get cheaper. And if it does get cheaper, then you can just refinance.
Right.
That's what I would say to them. I would say, look at the data, understand it. Yes, I understand that the house was 40% cheaper 5 years ago, but it's not getting back to that because the housing market only moves one direction in the long term, and that's up. So if you want to get in on it, the best time, everybody that says, hey, what's the best time to buy? The answer is very simple. When you're able and when you have the ability to.
Yeah.
When you can qualify and you have the ability to move and your life circumstances require it, that's when you should do it, because you don't know what the future, you go with what's the best information you have available. And the best information you have available is, hey, I can qualify now. I have the ability to buy right now. It's not going to get any cheaper. I should just go ahead and pull the trigger because I know this house is going to be worth more 3 or 4 years from now, or whatever it takes in the long term. Otherwise, I'm just going to continue paying like inflated rental prices and not having anything to my name. So that would be the best advice that I would give somebody as far as if they're on the fence. Like, okay, we'll look at what the fence has been doing for the last 100 years and really understand it.
I've learned more from my investor side because they don't really look at the rates too much. They look at whether they can break even or have a certain specific profit after a specific down payment based on the current rent that market can bring. And if the rates go down, hey, they'll just create more cash flow at a later date. But if they can make the deal work today, and that's my challenge to home buyers, my wife and I have always, we've put most of our income to max out so that we could get to that better school system or better neighborhood, and we would drive lesser cars. Matter of fact, there's some crappy cars that I've driven over the years so that my kids could be in a certain school district because that was more important to us. I go and I do these loans now, and I've got 2 people with $800 car payments where their rent is $1,500, but they're paying out $2,000 between the Mercedes and the Benz sitting in the parking lot of an apartment complex. We've done things backwards, and that's hard to undo that because now I've got to overcome a debt ratio issue and push people into it. And they're like, well, I should have a right. I haven't missed any payments. It's like, no, I think you're great. The problem is finding something that within your price range based on you've limited yourself with external personal debt. So I'm really trying to work hard with people on advocating for almost like the Dave Ramsey, let's pull you back. And, there is a generation saying, hey, I don't want to be bogged down. And I'm like, no, that's not what you're saying. What you're saying is things have gotten so expensive that it doesn't make sense to pay $500,000 for a 1,000 square foot house in Sacramento, California, that's 40 years old. That system's broken when I can get it for $156 in Alabama, the same house, brand new, 3-bedroom, 2-bath. Yeah, there's some variations there, but I can be a homeowner in one place. I can be a renter in another. So there's a lot of awareness. We have a lot of movement out there with people. When people say, oh, I can't move. And I'm like, well, if I can, you can. I mean, I moved a company. I moved my whole life from the West Coast, California to almost the East Coast. So it can be done. Change is hard, and I get it, but everybody deserves the opportunity at home ownership, and it doesn't always come in the format I think people think it does. Matt, I appreciate you giving us a half hour of your time. I know that you go 100 miles an hour. I know Legacy is all over you to keep going. They're huge proponents of positivity and health and all that. I love their calls. But I want to say thank you for being part of Xpert Home Lending. I want to say thank you for spending time with me today and giving us a chance to meet and talk, but also a chance for me to put something together that, the United States, because we're in 44 states, can now relate to you and get to you and find out, oh, this guy's been in the armed forces. Hey, this guy is adopted. Hey, this guy has been in a different industry and changes. I mean, you have a lot of ingredients that I think people can relate to. And that's what it's about. It's about people knowing something about the other person on the other end of the phone and being able to have some type of relatable thing so they can say, you know what? I only needed to know this one item about that person, and that sold me. And whether that's knowing that you've adopted, most people, 1, you've got 4. It's that's an incredible takeaway, by the way. Congratulations on that. I absolutely respect that kind of thought process. But I want to thank you for your time today. We're going to close you out with the famous Mortgage Ballers closeout, and this out goes. Stay thirsty, my friends. All right. Thanks, Matt, for your time today.
Appreciate it. Thanks, Rich. Take care.
All right. Take care.
Yeah. Bye-bye.